Good morning. It's Monday and the start of what could become another bumpy week in financial markets. Let's go. Index futures are brownish red this morning after an optimistic close Friday that had both the Nasdaq and Russell regaining two-thirds of the week's losses. The dollar is back in rise mode after mixed data Friday, import and export prices rising better than expected by much less than in March, and wholesale sales soaring by 2.8% month-on-month in March. On the other hand, core retail sales contracted by 0.8%, retail sales flattened, and industrial production fell to 0.7% month-on-month. All three sentiment markers for Michigan U are down, and their inflation expectations are up another point to a concerning 4.6% for May. Although politicians are already expressing concern, Fed pundits believe they will be able to handle the high inflation of an economy emerging from lockdown. Republicans and corporate lobbies are pushing for a repeal of unemployment benefits and Joe's threats of increasing corporate and wealth taxes. At the moment, there's no way to tell if we're in the midst of another retracement as the Nasdaq continues its bearish movement, or whether we have a true reversal here. Even the MACD convergence in both cases is identical. The only difference this time around is that the divergence has started a tad earlier, despite a much stronger histogram. European equities were up again as last week closed. Friday saw some favorable data from Europe, with Spanish consumer inflation up to 2.2% in April, and a comparatively upbeat monetary policy report from the EU. Later today, CPIs from Italy and short-term bill auctions in France. Save Taiwan and Korea, most Asian benchmarks are up this morning, seemingly untroubled by U.S. futures or poor Chinese data overnight. April's industrial production plunged from 14% to 9.8% year-on-year, while retail sales halved from 17.7% year-on-year. Home prices grew by an 8-month record of 48% in April as investors use real estate as a hedge against global inflation. A Chinese researcher quoted by Bloomberg believes the government will soon curb this with taxes on home ownership. Meanwhile, producer inflation in Japan more than doubled in April to 3.6% year-on-year, while both the Australian and New Zealand dollar are downward bound, the latter after the island state delivered a scathing 12.4% reduction in tourist arrivals month-on-month as recovery staggers forward. In Australia, Reuters reports a resurgence of investment banking as $6.21 billion worth of mergers and acquisitions traffic begins moving, and personnel return from offshore jobs. Towards midnight, we'll be getting a preliminary GDP reading for Japan's first quarter and Korea's trade balance at 1:30 tomorrow morning. Australia's central bank will release its latest meeting minutes. Oil is slightly up this morning, marking a third week of gains despite COVID resurgence in parts of Asia. We're still muted, though, as the Biden administration prepares to return Iranian fields to the supply chain. Bitcoin contagion has by now overtaken the entire crypto hotboard as investors follow Musk's lead in unloading their Bitcoin holdings. Gold has finally broken out of its week-long range, shooting past resistance at 1840 on Friday. The force is strong with us at the morning, so long as we ignore that shooting star up top, representing quite a hunk of negative volume. Still, we're quite a ways above the moving average, so let's allow ourselves some optimism and pretend that that's where all the crypto cash is going for now. In corporate news, AT&T is preparing to combine its entire assets portfolio that covers CNN, HBO, Discovery, TLC, and more as it completes its 2018 takeover of Time Warner. The new entity will result in a media giant worth about $150 billion, required to compete with the likes of Disney and Netflix. Honda on Friday surprised in earnings and revenue to the upside as the season winds down, and Rhino will be reporting later today. Well, now that the earnings reports are done, I guess we'll be able to concentrate more on politics. See you all tomorrow.